You know, for all the talk of election uncertainty here, investors reacted so strongly to the Senate. And when you look at this potential Georgia runoff here until January, what are the uncertainties that people are still baking in?
Well, I mean, obviously, people are concerned that if there is a Democratic majority, that we'll have higher taxes. But I've always said, even if that happens, we'll just have higher spending. And I think people tend to parse the both sides of the fiscal scale instead of looking at them collectively, like higher taxes, higher spending. So when you net it all out, it's probably pretty good, even if you do end up with 2 Georgia seats going to the Democrats. So the market will probably freak out about a little bit because it'll presume that we'll have much higher tax rates. But eventually it'll get around to realizing just we're going to have a lot bigger stimulus if that happens.
Yeah, I'm wondering about the balance out there, Jeffrey, because I mean, the last 4 years it was kind of dominated, at least for markets, it was kind of dominated by this discussion of lighter regulation, a lower tax base for a lot of corporations out there, and that sort of underpinned valuations out there. Even if you do get a higher tax rate in some fashion here, if you get the fiscal stimulus and you get the economic growth, presumably that would go along with it, is that going to be enough to sort of cancel out the bite of higher taxes?
Oh, I think it will. I mean, listen, if we get a tax increase, which, again, if it's a Republican-controlled Senate, I don't think we will. But if we got one, we're talking about basically some return to what it was like before the Trump tax cuts. There could be some higher capital gains rates. That probably means people will become longer-term investors rather than monetizing stocks and doing fast trading. So I actually don't think a capital gains rate necessarily impacts the bottom line as much. But, we'll have some sort of a return to the way it was under the Obama administration, which was actually pretty good for stocks. So, again, I think there's these narratives out there that, Republicans are great for equities and Democrats are not. And that's just not true. I mean, we look at all of that. It really doesn't much matter who's in the White House or who's controlling the houses. You got to figure out how to navigate it. But at the end of the day, the fundamental economics are really what drive markets. And we've got to come off the back of this downturn. It's virus-induced. The virus will end at some point. We will get back to some new normal, and economic activity will continue to pick up. And when that happens, we'll be back to the race. I think the market's actually looking through that already.
Jeff, it's Caroline here. And what's interesting to me is it seems that lawyers always win in some way, shape or form. But prior to the election, it felt like M&A lawyers in particular were just working their guts out because everyone was trying to get ahead of potentially a Biden administration. Now we're going to have lawyers involved probably for all manner of matters. But your perspective in M&A going forward and business confidence going forward if we do indeed get a Biden administration?
Well, I think, again, I think people will do the things they need to do in order to advance their businesses. And they just need to understand the regime and the framework under which the regime operates. So at these moments, these inflection moments where you might have a change in administration and a slight change in direction, it takes a while for people to figure that out. But then once they do, they go right back to doing what they need to do to drive their businesses. Seldom do you have an election that completely turns things so inside out that people get frozen for extended periods of time. Listen, we as humans and as creatures of the market are incredibly adaptable. If 2020 has taught us anything, we've seen highs and lows. We've seen more right tail, left tail events this year than most of us have seen in a lifetime, and we're doing okay. From the market standpoint, I think it's a little different if you're running a small business. But even there, I think once we get fiscal stimulus, which I expect to actually happen by the end of the year, I do think that McConnell probably gets something limited done in lame duck. My expectation is that small business will begin to think about rallying sometime in 2021 as things get back to a more normal economic cycle.
Jeff, I think we're all looking forward to looking past the next week here. But when we're looking into December, we've had some of our guests talk about some concerns about liquidity conditions, funding conditions. Do you share any of those concerns?
I don't. I mean, Jay Powell told you all you need to know we're standing here hosting down the runway. I've said all year long, they did a great job in March. Better maybe than any other Fed in history at making sure that there was liquidity in the market and lubrication in the market so that banks could continue to do basic things like overnight funding to limit unnecessary panic. And that's really what enabled everybody to have an opportunity to breathe and do normal, ordinary business, even as we were trying to figure out what to do a longer term with regards to the impact of the virus on the economy. So I don't expect there to be funding challenges. The Fed is at the ready. They've got many tools and really high caliber staff that is on the lookout with better information than we had even in 2008 to navigate this. So not expecting it at all.
Jeff, given this is the best run we've seen in the S&P since April, what can upset this rally?
Well, I mean, if I had a crystal ball, I don't know. Well, I mean, I do think right now we're focused a little bit more on the election than on the virus. The virus continues to do what it does, which is to replicate itself in as many different humans as possible. And I think that's going to have a chilling effect. Once things get settled out, we get back to taking a look at the devastation that's happening, as you'll see episodic lockdowns and things like that. That could obviously be a problem. And I think if there is any sort of a hang up in this idea about fiscal spending, I think that could be a problem, because the market is anticipating, and I think rightly so, that there will be a fiscal package here to help small businesses to really navigate the next 6 to 9 months, 12 months until we return to some sort of more normal economic activity.